All right, everybody, thanks for joining me as at Wednesday, the 23rd of January 2019. This is going to be a continuation off from the analysis yesterday. Very quickly, after that one black crow candlestick that did develop not only on the industrial average, but the S&P, the NASDAQ, I call it on the transportational average and the Russell 2000. Today we have seen what appears to be that of spinning tops and also doji candlesticks. So really what we're looking for, again, just to continue with this, is to see some form of a pivot develop. This is going to be a process over a number of sessions. Sometimes you can see a very quick retracement, but as it stands, as at the close, or very close to the close on Wednesday, it does look as though this is going to be a process. And it is also showing up as we push on up into that declining 50 exponential moving average. This is the chart of the industrial average. If I switch on over to the S&P 500, you can see that we are interacting with that almost sideways moving 50 EMA at the moment, at least over the past two sessions. And on the NASDAQ too, you can see that, again, although we have temporarily intra-session flinched below both the 50 and also the 10 exponential moving average, we do have that of delicate wicks. Now, we have approximately 5 minutes left in today's session. If I flick on over into these oscillators, this is what is probably most concerning, along with that of the retest of this macro support area that has held for the majority of 2018. So let me just stress very clearly, we're not looking essentially for the continuation of this correction. And when I say correction, talking about the correction from late August, early September, all the way down to the lows here on the NASDAQ. We're not looking as though this is going to be that sort of dead cat bounce, which is going to ultimately roll and then take out the swing low. That couldn't be further from the truth. In fact, what we are looking for is some form of retest of lower areas just to shake out this very short-term overbought sort of setting and overextended setting off from the lows down here at 6,250. Get these bounces. Most likely, we are going to see that of a pullback, which is going to allow these oscillators to reset a little bit. However, what will happen is that we will set up that higher low, and it's going to be a fantastic opportunity in the future to actually position yourself into Qs, diamonds, call it the SPYs, or even jump into a bunch of stocks on the upside, which we have already begun doing over the past 2 weeks in that pro analysis class. So as it stands, again, we're seeing a little bit of indecision. This is the industrial average just here. You can see that we are technically up about 150 points. However, it is resembling that of a pseudo doji candlestick mixed with a, also a spinning top. But again, think about those oscillators. The Fibonacci retracement of at least a portion of this bounce, this very strong bounce since the 26th of December, and then allowing the market and individual stocks to flush out a really good representation of this. And we've been speaking about this on IBM, and really it sums up a very important tenet that, again, a trend is assumed to be in effect until it gives us definitive signals that it has reversed, is that of IBM. Because if you go all the way back to 1993, you can see that we have had this definitive sort of line in the sand, which represents that of the primary macro bullish uptrend. Now, recently, as bearish as what IBM has been, we started to get interested, or at least looking at this on the long side, around this green rectangular box. We've seen some pretty flimsy sort of movements backwards and forth. It was looking as though definitively, again, moving into Christmas a couple of weeks ago now, almost a month ago, that we were essentially breaking that primary trend line, which has been in effect. Although we didn't take any short positions, we were optimistic that this would somewhat correlate with the market, setting up a whipsaw to the downside that would then reverse and get a breakout to the upside. Well, fast forward to where we currently are, or at least the current junction, you can see that leading into earnings. We did strengthen. We moved up to about $122. And even as recently as yesterday, we were talking about, well, it wouldn't surprise to see actually IBM gap to the upside, no matter what that report really was or fundamentally interpreted. We were to see, or expecting to see potentially, either IBM more or less move sideways or to see a bullish resolution to it all. And that's exactly what we've got today. We're up $10.71. If I bring up that monthly chart once again, you can see that we have an outside monthly candlestick under development for the month of January. And it's looking like a very strong continuation signal off from this primary bullish trend line that we have seen on a number of occasions in the past. So what we have right now is a gap. You can see that right here. The way the market is positioned at the moment, and again, expecting it to retrace a little bit, not to fall into the category of a larger sort of bear market continuation, more so that of the residual effects of a correction within a larger, broader bullish up market. You can very easily push, or at least place, a buy entry above the swing high of today's candlestick as at Wednesday. But most likely what is going to happen, especially if this is going to be a macro support area that essentially may not be retested for a number of months into the future, who knows, potentially even a number of years, and I do say that sincerely, what we would want to see if that was to be the case was to see this actually come on back down prior to breaking out, closing the window down here at about 122. And if this was to occur with the market retracing, okay, this will set the platform for IBM not having to actually come on back down to say 120, 122 in the future. And then what will happen, or at least not having to linger around this area, and then we're really going to begin playing with a bunch of overhead resistance areas, which are going to act as longer term sort of targets on this stock moving higher. So loving the way IBM is positioned. It's great to have this finally jump and gap to the upside. The best case scenario, both on the short term and the long term, is to actually see this close, and then that will provide some long-term foundation to jump into this, hold longer-term call contracts dated well into the future, and simply allow this to hold as the equity markets as a whole continue to rise after this little pullback. So something to think about. If not, just place your entry right above the swing high of today's candlestick, expecting, of course, potentially the pullback to occur. Then you can add some positions down here. Otherwise, just wait for the retracement to occur, and then you can just add for the first time down here at about 122, 124. All right, so that's how IBM anyway fits into the puzzle of the broader equity markets. Again, remain patient. This is most likely going to be that of a process of that sort of pullback. But again, for those who are patient, for those who don't buy into the negativity, the pessimism of when it does occur, you should be looking to go long, all right? Not immediately, but in due course. And then you'll take advantage of the market drifting higher into the month of February and also March. All right, everybody, so that'll do us as at this Wednesday afternoon. Enjoy your evening, everyone. You can see me later in the week, most likely here on YouTube. Otherwise, jump into Pro and have a look at that analysis. All the best, everyone. Farewell.